Welcome back to the deep dive. Today, we're tackling something genuinely significant, you could even say historic, in the crypto world.
Yeah, big news.
Huge. We're talking about a really major shift, something that hasn't happened in, what, over 7 years?
That's right, over 7 years.
Ethereum's spot trading volume has actually officially overtaken Bitcoin's. Now, this isn't just some, random stat.
No, not at all.
It feels like it could really be signaling, a whole new chapter for digital assets.
It certainly has that potential, yes.
So our mission today, what we want to do is unpack what this milestone really means.
Yeah.
Why it matters, for investors, for traders, and honestly, for that whole Web3 ecosystem, the decentralized web stuff.
Right, the implications are pretty wide-ranging.
We're going to try and get into the data, the stories behind it, and what this might mean looking forward.
Sounds good. Lots to cover.
And just before we really dive in, a quick but important thing. If you find these deep dives useful, if you get value out of them, it really helps us out a ton. If you could, like the video, subscribe if you're not already, maybe hit that notification bell.
Yeah, it genuinely makes a difference. Helps people find the content.
Exactly. It boosts us in the algorithms, helps these insights reach more people like you, and, well, it lets us keep making this kind of content. So your engagement, it really fuels these discussions. We're super grateful for the support.
Definitely. Okay, ready to jump in.
Let's do it. So this headline, Ethereum volume over Bitcoin.
It's really something. And emphasizing that over 7 years part, it just hammers home how rare this is, how big a deal.
Right.
What's really striking, I think, is that this isn't like a tiny lead for Ethereum. It's a clear, measurable shift. Everyone serious is watching this.
Mm-hmm.
And if you picture the charts, maybe some listeners have seen them, seeing that ETH volume line cross above the BTC line after all this time, it's visually powerful.
Yeah, it really jumps out.
It says so much, doesn't it, about a real change in market dynamics, maybe investor priorities, something that's been building for a while, I think.
That's a great point. It hasn't just happened overnight.
Definitely not. It feels like the result of several different forces all coming together.
It is a powerful observation because, for so long, Bitcoin was just the undisputed champ, right? Trading volume king, the main way money came into crypto.
Default, yeah.
And now, maybe suddenly, maybe not so suddenly if you've been watching closely, Ethereum takes the lead. We're talking monthly spot volume here on the big exchanges.
Right. Actual ETH being traded for dollars or other crypto. Direct trading.
On regulated platforms, surpassing Bitcoin. First time in over 7 years. It feels seismic, not just noise. What are your first thoughts? What does that flip immediately suggest? Is it just a pivot or is there more nuance?
Well, it's more than just numbers changing places, isn't it? It's symbolic. It forces us to really relook at how we think about these two assets.
Okay.
For years, the story was pretty set. Bitcoin is digital gold.
Right, the store of value.
Exactly. Store of value, hedge against inflation, bedrock asset. It's what institutions looked at first, seen as the safer bet for traditional finance, dipping a toe in. Scarcity, fixed supply, that whole narrative.
And Ethereum, always digital oil, the utility player.
Pretty much. The engine, the infrastructure, the programmable blockchain running this huge ecosystem, but maybe not the main thing people are trading volume-wise day to day.
So this flip, how do you read that in terms of those narratives? Are traders or investors starting to value the utility, the doing, more than the holding?
That's the million-dollar question, isn't it? It could very well signal that fundamental reevaluation, a real challenge to the old hierarchy. It hints that the market's maturing, maybe, that the doing, the utility, the apps, the ecosystem growth, actually using the network is becoming just as, or maybe even more important than just passively holding something as a store of value.
Interesting. So sophistication is increasing.
Possibly. Investors looking beyond just scarcity, looking at economic output, network effects. Are we maybe seeing a bit of a redefinition of value in crypto? Maybe value isn't just scarcity, but also what a network does, the economy it supports.
And this isn't happening randomly. There are specific things driving Ethereum's demand right now. Top of the list, I guess, has to be the ETF talk.
Oh, absolutely. The Ethereum ETF anticipation.
We saw the craziness with the Bitcoin ETFs earlier this year, the money that flowed in. How much weight do you put on the anticipation of ETFs driving this volume? Are there other catalysts too?
The ETF anticipation is massive, huge driver. The Bitcoin ETF launch set a very clear precedent. Institutions, investors, they saw it work, saw the inflow, saw the price
In fact, they
impact.
saw the playbook.
Exactly.
So,
So it's natural to think, okay, Ethereum's next. That anticipation alone creates demand now. People positioning themselves, wanting to get in before those potential floodgates open.
front-running the institutions, maybe.
You could say that. Getting set for when those regulated products make it easy for traditional money, the kind that prefers ETFs over crypto exchanges, to come in. That regulatory clarity, that ease of access, it unlocks potentially vast amounts of capital.
Okay, so ETFs are a big piece, but Ethereum has something else Bitcoin doesn't, right? That native staking yield.
Ah, yes. The staking yields, a critical difference.
Bitcoin, you just hold it. Ethereum, you can lock it up, secure the network, and earn rewards. How big a deal is that yield, especially for institutions looking for income?
It's an absolutely massive differentiator, especially for institutions. Think about the traditional finance world. Finding decent, reliable yield can be tough.
Right.
So the chance to earn a consistent native yield on a major liquid asset like Ethereum, that's incredibly attractive. It changes ETH from just a speculation or store of value play into something that generates income.
Like a bond or a dividend stock, almost.
In a way, yeah. When you stake, you're becoming a validator, doing work for the network processing transactions, keeping things secure under proof of stake. And you get paid for that in new ETH and transaction fees. It makes ETH a productive asset.
And we're seeing more ETH being staked, that stake ETH supply growth metric.
Exactly. That metric is climbing. More and more ETH is getting locked up for staking. And that's crucial because it reduces the circulating supply, the amount available to trade.
Supply and demand.
Basic economics. Less supply available, same or rising demand. It pushes up the price of what's left. It's a powerful incentive, bridging that gap between traditional finance's hunt for yield and crypto's innovation. It's more than just hoping the price goes up.
Okay, so we've got ETF hype pulling demand, staking yields pulling demand and reducing supply. And then there's just the sheer activity on Ethereum itself, DeFi, NFTs, tokenization. How much does the ETH volume reflect the health of that whole ecosystem?
It's intrinsically linked, completely symbiotic.
Ah.
Ethereum is the main settlement layer for most of DeFi lending, borrowing, exchanges, all that.
Still the dominant player there.
Oh, yeah. And NFTs, too, largely.
Yeah.
Plus, all these projects try and put real-world assets on the blockchain. More activity there means more need for ETH. Not just for gas fees to make transactions.
Right, the fuel cost.
But also as collateral in DeFi, as the money used in decentralized apps, as the base asset in liquidity pools. Look at the DeFi TVL dominance, total value locked. Ethereum still holds the lion's share.
So the volume isn't just speculation, it reflects real use.
Unequivocally. It validates its utility, its value. It shows real-world use, a buzzing developer scene. It's like a thermometer for the Web3 economy's health.
Which brings us to this idea of the rotation of capital.
Mhm.
Is this all just new money coming into crypto? Or are we seeing investors shifting funds, maybe from Bitcoin into Ethereum, seeing ETH as the next big growth story after BTC's run?
I think it's almost certainly a mix of both. But that rotation idea, it's definitely part of the picture and maybe an underestimated part.
Yes.
Well, think about it. Bitcoin had its big run, got its institutional nod, it's more established now. Some investors, maybe those looking for higher growth, higher potential returns.
The risk takers.
Or just growth seekers. They might look at Ethereum with its ecosystem, its utility, the ETF potential, the staking yields, and see the next major growth narrative.
Not necessarily the next Bitcoin, but the next big wave.
Exactly. Suggests market maturity, maybe.
Yeah.
Capital flowing more intelligently to where the dynamic utility and growth potential seem highest, not just sticking with the original store of value play. It shows a deeper understanding of the different roles these assets play.
Okay, so if you're an active trader, especially an ETH trader, what does all this increased volume mean for you? Good news, right?
Oh, absolutely positive for ETH traders. More volume means a healthier, more dynamic market. You get stronger liquidity.
Meaning easier to buy and sell without moving the price too much.
Precisely. More buyers and sellers at different prices. That, plus the higher volumes, usually leads to tighter spreads.
The gap between buy and sell prices gets smaller.
Right. The bid-ask spread narrows. That means it costs you less to get in and out of trades. Less slippage, especially if you're trading larger amounts.
So overall, more opportunity.
Definitely. Easier entries and exits, better price discovery, lower execution risk. It makes the market more efficient, more attractive for sophisticated strategies. It's a sign of maturity.
Now, flip side, what about the Bitcoin holders? How should they view this? Bitcoin's still the big institutional hold, right? The corporate treasury asset.
That's a really important nuance. Yes, Bitcoin absolutely maintains its lead in institutional reserves. Big companies, traditional finance players like MicroStrategy, they're still mostly holding BTC for the long haul.
The digital gold play.
Exactly. Hedging inflation, strategic allocation. They like the scarcity, the track record.
But this volume flip,
It does strongly suggest a growing preference among, well, retail and DeFi investors for ETH, and maybe a newer wave of institutions too.
so a potential split in strategy.
It could be. It suggests that while some big players stick with BTC's store of value story, another big chunk of the market, maybe those more active in Web3 or focused on yield, sees ETH as more dynamic, more useful, more full of opportunity right now.
Interesting. So maybe not one size fits all in crypto strategies anymore.
Seems that way. Different investor types, different goals, different asset choices.
This pattern, ETH gaining strength against BTC, especially in volume, it rings a bell. Doesn't this sometimes foreshadow what people call altcoin season?
Ah, yes. The harbinger of altcoin season. You're right to make that connection.
Can you explain that? What typically happens? How does that work?
Yeah, historically, when money flows into ETH like this, and ETH starts outperforming Bitcoin significantly, it often kicks off a broader rally in other altcoins.
Why is that?
The logic is pretty simple. If Ethereum, the biggest altcoin by far, is doing well, gaining interest, showing strong utility, it kind of validates the whole smart contract ecosystem, right?
Lifts all boats, sort of?
Kind of. Investors who made gains in ETH or are just feeling bullish and looking for higher returns start looking down the list. Where's the next opportunity?
So the capital trickles down.
Exactly. It flows into smaller, sometimes more speculative altcoins, especially those built on Ethereum or with strong narratives. They ride the wave of optimism, the idea being if ETH is booming, good projects built on it or similar to it should too.
And altcoin season means those smaller coins see big gains.
Typically, yes. They often outperform both Bitcoin and Ethereum during those periods as capital chases higher risk, higher reward, plays down the market cap ladder. It's a time of broad, exciting growth across many different digital assets.
Fascinating. Okay, let's zoom out again. Broader Web3, the ecosystem. You called Ethereum the settlement layer. What does this surge in ETH activity really tell us about the health of DeFi, NFTs, tokenization? Is it just more money sloshing around or something deeper?
I'd say it's definitely deeper. This ETH activity, it's like a direct pulse check on the whole ecosystem's health.
How?
Well, more ETH volume, especially sustained volume, means more actual use, more transactions happening, more smart contracts running, more NFTs being created and traded, more value being locked in DeFi. It reflects real usage, real development.
Not just speculation.
Right. Ethereum is still the heart of decentralization, the foundation for so much of Web3. When it's buzzing like this, it shows confidence in the platform, its security, its future upgrades. It means builders are building, users are using. It supports innovation across the board, exchanges, lending, gaming, identity, everything.
Okay, and let's drill back into that lure of staking yield for institutions.
Correct.
You contrasted Lido, the liquid staking protocol, with MicroStrategy just holding Bitcoin. Can you flesh out why that yield difference is such a game changer for big money?
Absolutely. For institutional money, generating yield is often core to their whole strategy. Traditional finance runs on yield bond interest, stock dividends, rent from real estate.
Right, income generation.
Bitcoin is great as digital gold, scarce, resistant to censorship. But it doesn't inherently produce income just by holding it. MicroStrategy holds it, hoping the price goes up, hedging against fiat. They don't get a Bitcoin dividend.
Okay.
Ethereum, after it switched to proof of stake, is different. Staking ETH means you're actively helping run the network. You lock up your ETH, you validate transactions, you help create blocks, and you get paid for that work in new ETH and fees.
So it becomes a productive asset.
Exactly. It works for you.
Yeah.
Now, protocols like Lido, they offer liquid staking. This is super attractive for institutions.
Yeah, liquid.
Because you stake your ETH, you start earning rewards, but instead of just having it locked up, Lido gives you back a different token, like STETH. This token represents your staked ETH plus the rewards it's earning.
And you can use that STETH token.
Yes, that's the key. You can use it in other DeFi apps, maybe as collateral to borrow against, or put it in a liquidity pool to earn even more. So you get the staking yield, plus you keep your capital liquid and potentially working elsewhere.
Wow, okay. Best of both worlds.
For many institutions, yeah, it's yield and flexibility. That's a much more dynamic investment compared to just holding a non-yielding asset like Bitcoin. It lets them potentially compound returns within DeFi while helping secure Ethereum. It's a really compelling setup that ties ETH deeply into the functional economy.
So this really strengthens that digital oil idea, doesn't it? It's not just tech utility, it's real economic activity. Is this volume surge proof that Ethereum is now seriously competing with Bitcoin's digital gold story by showing off its active economic engine?
I think it absolutely is. It reinforces that digital oil narrative significantly. If Bitcoin is the scarce gold you store away.
Ethereum is the oil that makes the whole machine run.
Exactly. The high trading volume shows it's being used, moved, consumed, not just stored. It's the fuel for transactions, the collateral for loans, the currency of the NFT world, the base layer for tokenization.
So the market is valuing the doing more.
It really looks that way.
Yeah.
That the economic activity, the function, the utility, is being valued maybe more highly now than just the passive holding of a static asset. It makes Ethereum a serious contender, not by being better gold, but by being indispensable digital oil.
It shifts the conversation.
Totally. From what's the best store of value to maybe what asset has the most economic activity, the most utility, the most growth potential in this new digital world. It's a subtle but powerful redefinition of crypto value.
Okay, to really get how big this moment is, we need a bit of history. Ethereum's had busy periods before, but this feels different. Let's touch on some key moments. First, that Shanghai upgrade in 2023. Why was that such a critical turning point for staking?
Shanghai back in April 23 was absolutely pivotal, a real game changer. Its main job was simple but crucial. It allowed people to finally withdraw their staked ETH.
Which they couldn't do before.
Nope. Before Shanghai, if you staked your ETH to help secure the network, it was locked up indefinitely. No clear timeline on when you could get it back. That was a huge risk, right? Especially for big institutions needing liquidity.
Yeah, locking up capital with no exit date is tough.
Exactly. So enabling withdrawals massively reduced risk for stakers. And what happened? It sparked massive staking participation. Confidence soared.
Because the exit door was now visible.
Precisely. It removed a major barrier, making those attractive staking yields we talked about much more appealing to a wider range of investors. It was key to making ETH more institution-friendly. The smooth rollout of withdrawals built a lot of trust.
Okay, and then right alongside that, we have these ongoing Ethereum ETF filings and all the buzz around them. How does that feed into the current volume surge?
The ETF filings, they're not just rumors.
Yeah.
These are concrete moves by huge players, BlackRock, Fidelity, you name it. It signals very clearly that institutional investors are actively preparing to deploy significant capital into ETH via familiar, regulated channels.
It's a serious vote of confidence from Wall Street.
Absolutely. When these giants file for spot Ethereum ETFs, it tells the market they see serious long-term demand for ETH exposure from their clients. It adds legitimacy, signals deeper integration with traditional finance.
And that attracts more capital.
We bet. It brings in money that might have stayed on the sidelines, waiting for those easy, regulated on-ramps. Even just the anticipation creates buying pressure now as people try to get ahead of those potential flows.
Okay, so Ethereum's had big moments before. I remember the 2017 ICO craze, right? ETH was everything then.
The fuel for the ICO boom, definitely.
And the 2021 NFT explosion, mostly on Ethereum.
Dominant chain for NFTs, yeah.
Yeah.
Massive activity.
DeFi summer in 2020. Ethereum was the backbone.
Unquestionably.
Yeah.
The foundation for all that innovation.
But you're saying even during those massive peaks of activity, ETH volume rivaled Bitcoin's, but never actually beat it until now.
That's exactly the point. That's what makes this moment unique, truly historic. In 2017, volume soared as people bought ETH for ICOs. In 2021, NFT mania drove huge ETH volume. DeFi summer, same story. ETH volume was incredibly high. It competed strongly with Bitcoin, showed its power.
But never quite crossed the line.
Never definitively surpassed Bitcoin in monthly spot volume. Not until now. This time is different. It's a clear crossover. It feels like the culmination of years of building, ecosystem growth, the merge, Shanghai, the ETF narrative, all leading to this point. It's not just another peak. It's new territory.
So let's quantify this. What are the key charts, the metrics we should really watch to grasp the scale of this? Obviously, the main one is the flip chart itself, the ETH versus BTC monthly spot volume. Seeing that crossover, what does it scream to you?
That chart is the smoking gun, right? The core visual evidence. Seeing that ETH line climb above BTC after 7 long years. It's dramatic. It's not just a data point. It graphically shows a fundamental shift in trading focus and where the capital is most active.
It makes it real.
Exactly. It validates this whole conversation. It's the clearest sign that something genuinely new is happening, moving beyond theory to actual observable market behavior.
Okay, beyond raw volume, Traders love the ETH BTC ratio. Can you break that down? What is it, and why is it such a key indicator of relative performance?
Yeah, the ETH BTC ratio is super important for tracking relative strength. It simply measures how much Bitcoin 1 Ethereum is worth. So if the ratio is 0.05, 1 ETH buys you 0.05 BTC.
And if the ratio goes up?
If it's rising, ETH is outperforming Bitcoin, its price is going up faster or falling slower. If it's falling, BTC is doing better relative to ETH.
So traders watch it to see which horse to back.
Pretty much. It's critical for deciding whether ETH is beginning an outperforming cycle against Bitcoin. It heavily influences allocation decisions should your portfolio be weighted more towards ETH or BTC. A rising ratio, especially combined with this volume flip, is a very bullish signal for ETH's relative strength. It suggests a potential re-rating against Bitcoin.
Got it. And we mentioned staked ETH supply growth earlier. Let's look at the mechanics again. How does locking up more ETH for staking directly impact supply, demand, and price?
It's classic supply-demand, but tied to network security. As more ETH gets staked, it's removed from the circulating supply, the pool of ETH available to be freely traded on exchanges.
It's locked up, working for the network.
Right, so the available trading supply shrinks. Meanwhile, if demand stays the same or increases, which it seems to be doing thanks to utility, DeFi, ETFs, you have less supply chasing that demand.
Which pushes the price up.
Naturally, it creates upward pressure on the price of the ETH that is still circulating. It's a fundamental economic force baked into Ethereum's design now. The more secure the network becomes through staking, the scarcer the tradable ETH becomes. It's a structural tailwind.
Okay. And then there's DeFi, total value locked, TVL, dominance. Why is Ethereum holding on to its lead in DeFi capital so important for validating its value and supporting this volume surge?
DeFi TVL dominance is like a direct measure of Ethereum's economic gravity and utility. It shows how much capital is actually deposited and working within DeFi apps, lending, exchanges, etc., on Ethereum versus other chains.
And Ethereum is still way ahead.
Consistently holds the vast majority. That dominance shows it's still the most trusted, most used, arguably most secure platform for serious decentralized finance. Billions are locked there.
So it's not just hype, there's real financial activity.
Tons of it. That fundamental utility, that trust, that network effect, it directly underpins and justifies the high trading volume. ETH is essential to participate in that huge DeFi ecosystem. It validates its core value proposition beyond just price speculation.
Lastly, looking outside crypto at reports like CoinShares' weekly summaries on ETF flows, BTC versus ETH, what can those tell us about institutional sentiment and actual money moving?
Those reports are gold dust for seeing what institutions are actually doing with their money, not just what they're saying. They track flows into regulated products like ETFs.
So you can compare BTC ETF flows with potential ETH ETF flows.
Exactly. Right now, Bitcoin ETFs have a huge head start in assets. But watching the flows week by week tells you where the new institutional money is leaning. Any significant, sustained inflows into ETH-based products would be a massive confirmation of growing institutional appetite.
It's like an external reality check from traditional finance.
Precisely. It shows how traditional capital allocators are voting with their dollars in the regulated markets. It's a crucial indicator of broader market sentiment among those long-term, often more conservative players.
Wow. Okay, what a deep dive that was. We've really covered some ground. This historic moment, ETH spot volume topping BTC after 7 years, the shift towards utility, staking yields, ETF hopes, the impact on Web3. It really feels like more than just numbers changing.
It does feel like a potential narrative shift, a maturation, yeah.
So as we wrap up, I really want to turn it over to you. Listening, we've thrown a lot out there. What stands out most to you? Do you think Ethereum's really set to maybe flip Bitcoin long-term as the most traded, maybe most dominant crypto?
Right.
Or is this just a temporary rotation?
Big questions.
Yeah. And thinking about your own approach, are you more drawn to Bitcoin as digital gold, that store of value, or Ethereum as digital oil, the utility engine? And why? What's your reasoning? And what about altcoin season? Is this the starting gun in your view, or just ETH getting its moment? Finally, if this ETH trading dominance sticks, does that make ETH the better long-term bet for you? Lots to chew on.
These really are the core questions this whole situation forces us all to grapple with. It makes you reassess everything.
Definitely.
And maybe one final thought to leave everyone with, build on that a bit. If the market is increasingly valuing utility, active use, yield, economic breadth, more than just passive storing of value, what does that mean for the whole digital asset space, not just ETH versus BTC?
Interesting.
Is this the start of a fundamental shift in how we define crypto value itself? What will leadership look like in the next decade? Maybe it's less about being static gold and more about being dynamic oil or something else entirely we haven't even seen yet.
A fantastic, provocative thought to end on is value shifting from static to dynamic.
Brilliant. Well, thank you so much for joining us on this deep dive into Ethereum's huge moment.
My pleasure. Fascinating topic.
We really appreciate you tuning in, engaging with this stuff. Keep learning, keep questioning, and we'll catch you on the next deep dive.